Gold technical analysis, $3,900 support faces Fed pressure. Gold and silver remain under pressure ahead of the Fed decision, with gold testing $3,900. Gold price remain under pressure ahead of the Federal Reserve's interest rate decision. Gold hit a high of $4,116 on Monday before sliding back to $4,000. The metal was weighed down by a stronger US dollar and hopes of a hawkish Federal Fed could maintain the interest rates at 3.50% to 3.75%. But a statement by Chairman Kevin Warsh could indicate that the rate will stay elevated as long as inflation remains higher than the 2% target. It may support the US dollar and push gold and silver prices lower in the short term. The softer data from the U.S. economy supported the gold rebound. The consumer confidence dropped in July and the private sector began to hire fewer people. These figures could ease some of the pressure for tighter monetary policy. If the Fed emphasizes slower growth and employment, gold could rally. The daily chart for spot gold shows that prices have been consolidating below the resistance of $4,200. This consolidation now shows that prices are under pressure. Therefore, a break above $4,200 is required to ease this pressure. If the gold price fails to break above $4,200, prices will likely reverse to the downside and break the $3,950 level. This break may open the door for strong drop toward the $3,800 area. On the other hand, if prices break above $4,200, it will likely push further toward $4,500. The 4-hour chart for spot gold also shows the same pressure as prices are trading at the edge of the triangle pattern that emerged from the January 2026 highs. Prices have been showing bearish pressure since January 2026. Once prices broke below $4,500, the move pushed them toward the $3,900 to $4,000 area. A break below $3,950 will indicate that prices have broken to the downside and may drop further toward $3,800. If the triangle breaks to the upside, then $4,200 will be the first immediate resistance. Gold and silver could continue to fluctuate as investors respond to the Fed and their outlook on interest rates. A hawkish message could be bullish for the US dollar and bearish for both metals. Gold price is stuck in range between $3,950 and $4,200. The Fed meeting could determine whether gold breaks out of its current consolidation range. Rising U.S. Treasury yields continue to limit gold's upside despite easing inflation pressures. A break above $4,200 could revive the long-term bullish trend, while $3,950 remains the key downside level. Gold prices exhibit compression patterns before the Fed decision. In my view, gold may remain under short-term pressure while Treasury yields stay elevated, but this correction could prepare the market for the next long-term rally. This article examines the Fed outlook, inflation risks, nominal GDP growth, Treasury yields and the key technical levels that may shape the next move in gold.